Hello and welcome to the Look Ahead with me, Fiona Cincotta, Senior Market Analyst at City Index. As we look ahead to tomorrow, that's Wednesday, the 5th of February. So overnight, we'll have the Chinese Catering Services PMI will be released. In the European session, we've got Eurozone Services and Composite PMI. That is the second reading rather than the preliminary reading. We also have PPI inflation for the Eurozone. UK Composite and Services PMI. Then in the US, we'll be watching out for US ADP payrolls and ISM Services PMI. Also, earnings in the US continue with Disney, Qualcomm, and Uber all set to update the market. So let's just take a look then with what we'll be watching. I think the other thing to keep in mind is there is a massive focus, obviously, on Trump and on trade tariffs. And that's being sort of played out as one of the key themes that's driving the markets. We've seen increased volatility. So whilst we saw that big sell-off on Monday, we've seen a recovery on Tuesday as the market has sort of cheered news that Trump is pushing back on or pausing tariffs on Mexico and on Canada for 1 month. And also we've seen tariffs applied, 10% tariff applied to China as from today. We did see a retaliation from China, but it wasn't really as aggressive as it potentially it could be, perhaps suggesting that it's just enough to catch Trump's eye in order to open negotiations. So there is a sense that maybe this is sort of being used as a route to negotiation rather than necessarily the all-out aggressive trade tariffs, which would be the market's worst case scenario. But anyway, we've had sort of warnings from Federal Reserve officials that trade tariffs could create inflationary pressures, which obviously would be bad news for the US equity markets, and we might see a stronger dollar. But interesting, we have seen the dollar come off today. But I think all of this, what we've been seeing about these sort of, unpredictability of Trump and also the uncertainty in the markets has been playing out in safe havens, but particularly in gold. So if we just have a look, this is the gold chart here. Gold is trading at all-time highs above, well, just heading towards that 2845 level, just below 2,850. I mean, we can see here it's had this recovery from the 2,583 low that was just at the end of last year, trading in this rising channel, actually just breaking out of this rising channel. We are in overbought territory. It is worth just bearing in mind in previous cases when we have been in overbought territory, we have seen a little bit of a sell-off after, so there is a potential to see a little bit of coming off of the price, but then, as I said, we are seeing this on the back of safe haven flows given those uncertainties surrounding Trump. On the upside, if we do see some consolidation, bulls then could look towards the 2,850, 2,900 levels. And then on the downside, I mean, that would be the immediate support that I'd be looking at, and that would be around the 2,790. That was the previous all-time high from the end of last year. But I think, even then we could look lower down to 2,720 as a reasonable support level to negate that rising trend. Wouldn't see a lower low unless we get below 25.83. That was the low I mentioned that we saw at the end of December last year. So let's just take a look at what all this means also for the Nasdaq. Obviously, we're in the middle of earnings season as well. Tech earnings coming through thick and fast. We haven't yet had Alphabet. They will be released later this evening. We've had Spotify. They've jumped 8% on really strong numbers and their first full year of profitability. Planeteer have done extremely well, up 20%. So there have been some encouraging tech figures coming out. A lot of eyes will be on Alphabet, which could set the tone for trading tomorrow morning. But we've also got, as I mentioned, US data. We've got ADP payrolls. We've also got ISM services. Both of these are going to be watched closely because obviously ADP payrolls are expected to rise to 150K up from 122K. And ISM services are expected to tick higher to 54.3, up from 54.1. So if we do get this strong data, that's going to sort of really support that view that the US economy is holding up very well. It's showing resilience. It's actually exceptionalism in the US economy, which means that the Federal Reserve may not be able to cut interest rates at the pace that they would like to cut interest rates, because inflation just won't, will be, growth adds to inflationary pressures. So that's something that we won't be able to, that wouldn't necessarily be supportive of further rate cuts. So, if we do get this strong data, that could be a case of strong data is actually bad news for the stock market. If we get weaker data, we might find that actually encourages Fed rate cut expectations and pushes stock higher. But we're just sort of seeing this indecision at the moment. If we just have a look at this chart, we rebounded off this level here, the 2,750, pretty much the same low that we saw on Monday. It's the 100 SMA. It's also the falling trend line that we saw from dating it back to mid-December. So that long lower wick there, the long lower wick that we saw on last Monday as well, suggests that there's little selling pressure at those lower levels. And we've seen the rebound back above the 50 SMA. But the price is holding above the 50 SMA, which is encouraging. I think we would need to see further. I mean, it's keeping it pretty neutral. We've also got the RSI, which is neutral, but bulls really need to be pushing back up towards that 22,000 level in order to be looking towards 22,100 and fresh all-time highs. If we do get a close below that 50 SMA, I think I'd be a little bit sort of more concerned about the outlook. But, ultimately, sellers need to get below the 20,750 in order to create a lower low and break below that 100 SMA for the first time since September last year. So just whilst we're sticking with the US and what's going on there, let's have a look at what this all means for the US dollar, Japanese yen. Not actually seeing that much movement go on here. Obviously, we've had sort of some wild swings in the US dollar, but that seems to have been pretty evenly matched by the Japanese yen, which has obviously also got that safe haven status. So, we haven't seen much movement at all in the yen compared to, some of the big swings that we've seen in some other currency pairs, such as the Aussie dollar, and also obviously the USD, Canadian dollar, and the Mexican peso. But just worth watching this one for a breakout. I think, we have seen a series of lower lows and lower highs. We're just stuck around that 155 level, just below the 155 level, and the this one here, 153.30, which is the 61.8% fib level, fib retracement from the 162 high to the 139.50 low. So yeah, looking for a breakout here. I mean, if we can get below that 153.30 and the 200 SMA there at around the 153, just below the 153 level, that could really see things start to slip quite a bit further southwards towards that 150 level. On the upside, if we can get above that 155, that's going to bring 157.20, which is the 78.6% fib level, but also the high that we saw last week. So that's going to be sort of where we'll be watching out for on the upside. I did mention we also have euro data in tomorrow, Eurozone PPI, wholesale inflation. So that's expected to show that wholesale inflation actually just eased a little bit to 0.4% month on month, down from 1.6%. So would suggest that sort of tends to be a leading indicator for consumer price inflation. So that would suggest that maybe it is going to slow. We've obviously seen inflation, consumer inflation in the Eurozone took higher more recently. We have the data just at the start of this week. And in fact, core inflation is remaining fairly sticky at that 2.7% level, where it's been, I think, for around 7 months now. So that's really quite a while. We've seen a tick higher in headline inflation as well for the 4th straight month. So there are sort of, signs that inflation has been a little bit on the persistent side, but maybe this PPI data will show otherwise and that it's starting to ease again. Services and composite PMI data for Eurozone, as I mentioned, but this is secondary reading, doesn't tend to be as market moving as the preliminary reading. So but still worth keeping an eye on, as obviously any trade comments from Trump. We did hear from Trump over the weekend, who suggested that the European Union could be next in line for trade tariffs. So another reason that we might find gains in the euro could be limited. But let's just have a look what's going on here. This is the chart. We picked up from that January 13 low, rallied up to 105.30, lost ground since then. But again, we've seen long lower wicks on these candles, which suggests little selling pressure at those lower levels. Look, we just rebounded off that falling trend line support, which dates back to September last year. Back above this level here, 133.30, which I think is a pretty key level in order to be building any sort of recovery. Next level we'll be watching for is the 104.50. That's been a level that's offered a little bit of support and resistance over the previous months, and above that we need to get towards the 105.30. Need to rise above 105.30 in order to create a higher high and extend that move northwards. On the downside, sellers are going to be looking out for, first of all, need to take out that 103.30. And then on the downside, the 102.80 level. That was today's low. It's a level that's sort of caught a little bit of attention across the last month or so, with a break below there, opening the door to 102. So I guess the only other one to be looking at, actually, which has seen quite a bit of movement, is oil prices. We just have a look here. We're back into this really interesting zone around the 72.50, 71.50. Oil has come under pressure, basically, as China has applied tariffs, retaliatory tariffs to the US, including on oil. So just a little bit of concern about what that means. But then we've also had the OPEC meeting this week, and they are set to increase production as planned in the around April, slowly, steadily increasing production, which is going to keep a little bit of pressure on prices, especially as there are some questions over the demand outlook with the potential of trade tariffs and what that might mean for global growth. So oil may struggle to move much higher. It might find that it's limited to the any upside is limited. We're below the 200 SMA, so I think, and we've just tested here the 100 SMA, but we're back at this resistance support zone, which we've been fairly familiar with. We talked about it for the last 9 months, so we do really need to see a break below that in order to sort of get back towards the $70 a barrel level, and then down towards this $67 a barrel level. On the upside, buyers are going to need to rise above the 200 SMA and the 75 round number in order to extend gains. So that is everything from me. I hope that you have enjoyed what you've been watching, and I look forward to seeing you again tomorrow.